Hi guys, welcome to the live stream. As always, please write on the chat. Can you hear me? Can you see me? Is everything on the screen is clear? Can you see that we are looking at the Euro USD? I understand that the prices are a little bit small, but this is MetaTrader. This is how it works. So nevertheless, please write in the chat if everything is okay. If something is wrong, also please write it in the chat. I'll fix it because we have some time before the actual release. But nevertheless, while you're writing, we are starting the live stream. Today, we will talk about US Consumer Price Index, US inflation release that will come out in 10 minutes. This is, as always, the most important release of this week, maybe the most important release of this month, because the US Federal Reserve, the central bank of the United States, is watching after the inflation release and adjusting their monetary policy according to the numbers. What do we have for the numbers from the fundamental side. So the last two releases were higher than expectations. The release 3 months ago, it was 3% CPI, so inflation is 3% annual. The following one was 3.2%, and the following one was 3.7%. So inflation is actually rising. Why is that bad? Well, it's not that bad as someone might say. Nevertheless, when the inflation is rising, the US Federal Reserve needs to act more hawkish to control it, to control rising prices, because usually wages are not growing as fast as inflation, and people have less money, less economically active. They become less like benefits everybody has. That's why Fed is trying to control the inflation. They are trying to slow down the rising prices, and then they can speed up the economy again. But before that, they need to have a consistent near 2% annual inflation, and that's what they don't have as for now. If this release today will come out higher than expected, then it is definitely a trend of growing inflation, of growing and rising prices. And this is very, very destructive for the US economy, because the US Fed will have probably they will have no other choice but to continue hiking the rates, rising the interest rate, or not decreasing it, at least not lowering the rate. That is very, very bearish for the risk assets, for the stocks, for the indices, for cryptocurrency, of course, and also probably that will be quite bullish for the USD, because when the rates are higher, the USD tends to go higher. Nevertheless, this is not what's in our focus right now, because right now in our focus is, of course, gold, which is like the main asset you guys trade probably. Let's look at the chart a little bit, the gold chart. Here we have the 4-hour time frame of gold. It is rising, as you can see. It started with a gap up this week after the conflict started, and since then, the gold had no other choice but to rise and reach every resistance level and break through it just without any efforts. We witnessed how the gold broke through the resistance at around 1857, and then now it broke through this resistance line at around 1880, and it's still growing. What options do we have for today where gold might move today? Well, I see a resistance level around here. I will mark it with the price rate label so it will be clear for you where I'm talking about, what I'm talking about. Yeah, so we have the level of 1885, 1886. That's like another resistance level for gold. And the breakout above this level would definitely mean that the news for gold are very bullish, and the US dollar is going down. So yeah, gold is going up. The release is only 6 minutes away from now. Guys, also write in the comments your expectations. What do you think? And let's trade together. Let's open some nice trades. So what I'm personally expecting from the release and from assets, you would say, well, as I said, the inflation is growing. And when the inflation is growing, this is very bad for the economy. And when this is bad for the economy, the US Fed had what choice? They had two choices. Like always, they have two main choices. The first one is to keep the rate at the current level. Keep the rate at the current level, that means that the economy will remain under pressure. The banks will be damaged, the stocks will be damaged, cryptocurrency will definitely go down. We'll talk about crypto a little bit later. It's not like in the focus of our stream right now, but still it's important because there are quite a few pretty good trade ideas for me to share. So yeah, and when they keep the rates at the same level, at the same very high, relatively high level, that means that the risk assets are going down. And if we look at the US dollar index, this is 4-hour time frame, it is, as you see, going up for the last 3 months, and it's now in some form of correction. So if they remain rate at the same level, the US will probably go higher again, because it will mean that there are no dovish, no weak comments from the Fed coming soon. When there is nothing weak for the dollar will keep on strengthening and will go higher. So yeah, this is a daily time frame. Let's just change it so you can understand in each moment what we are looking at exactly, because MetaTrader has pretty small letters over there. So yeah, this is daily US index chart. Um, as you see, the market stopped believing in actual rate hikes since like the start of this year. This consolidation started and lasted for the whole year. So this is like the January 2023, and we have this pretty broad range, but still this is the range. We collected some form of liquidity over there, and then we went above this resistance level. So yeah, what we have for now, right now, I think that the breakout of this level of, let me show it to right price level, yeah. The breakout of this high level of 107.25, it would mean that the US dollar is about to go higher to the previous highs at around, I don't know, 113 or 114, around here, 114 around, yeah. So that's what we have for the US dollar, guys. Just let me check the chat, because today it's only you and me, guys. Euro USD, yeah, of course. I see a lot of Euro USD fans over there, guys. I'm with you. Euro USD is my favorite trading asset, trading instrument, of course. Yeah. So what we have on the Euro USD, I usually start from the high time frame and go to low time frame, because it's just wiser for me, and it's more understandable. So Euro USD broke through this resistance. And let me show it through this line, 1.062, and slowly going higher, collecting liquidity. Like Euro USD is looking like it's going to fall, like it's going to fall against the USD, which is going to rise. Of course, for me, this is my expectations, but it's not falling right now. It's waiting for something. Can we look at what happened before in such situations? Okay, let's look at this area right here. What do you see here, guys? That Euro USD has been moving lower and lower and lower. At some point, it stopped. It formed something like inverse head with the shoulders, so it's pretty much a bullish pattern. But what actually happened later is that Euro USD collected liquidity above all these two levels. Indeed, collect this liquidity, but it doesn't matter. It have collected enough stop losses to continue the downtrend, to continue moving lower. That's why while we are still in a downtrend, I'm looking for sell trades. I'm looking for the point of on the chart, especially, for example, this point on the chart where the pair collects stop losses, then it breaks through the previous low, and that's the selling point for me. Right now, we didn't get this selling point. We are just moving higher. So I'm expecting the same movement. I'm expecting some liquidity collection, then sharp decline, slow pullback, just a little bit of a pullback, and then the continuation of the decline. Of course, this is only my assumptions. These are like not 100% accurate predictions, because I'm a trader just as you. I'm thinking with probabilities. So that's what I'm personally expecting. We're in the downtrend. And as for me, the downtrend is a logical way where we are looking for sell trades. Okay, I just need to look at the actual data, guys, to say to you what is happening on the chart. And as we see right now, Euro USD is falling. Let me just show to you that this is Euro USD 1 hour, just for everyone to understand. So we are stopped rising at around 1.06362. So yeah, the not so accurate as I would say, but still, yeah, okay, that's good. What do I have about the numbers? Oh well, okay. So actually, I was right. CPI is above expectations. It's 3.7% versus 3.6% expected. And monthly CPI is also above expectations, 0.4% versus 0.3% expected. Well, that's quite a numbers. Well, that's quite a numbers, and this is bearish for the Euro USD. This is also, as for me, bearish for the stock market and for crypto market also. But if you look at the stock market, it doesn't fall right now. It doesn't fall right away. It's still like wobbling around, thinking where to go. Maybe that's because the US trading session hasn't started yet, and today it will go down. But on the lower time frame, yeah, it's trying to go down. I wouldn't say that this is some form of a plunge. We're still in a local uptrend, as you can see. This is US 500 1 hour time frame. Yeah, guys, and we are still in local uptrend. I don't see any signs of an upcoming decline except for the news, of course. Let's look at the gold chart. So yeah, gold is also moving lower right now. That's logical because if the USD is moving up, gold is usually tends to move down. And what I want you to look at this trend line we are breaking right now. So if let me just write that this is gold 5 minutes time frame. Yeah, M5, sorry. Okay, we are trying to break this line. I wouldn't recommend opening a sell trade right now, okay, guys, because this is news. Of course, every news release is a volatility spike. So if you're a volatility trader, that's okay for you. I'm not judging there. If you want, you can open a trade. That's totally normal. But for me, my personal trading strategy is to wait for the market to get the new direction, to understand it. Because right now, it can be a breakout of the trend line. It can be a trend change. Of course, it can. And you can start trading it right away. Right now, open sell trades on gold. But it also can be just a liquidity collection. Just the price go down, collect all these stop losses, and then what? Then it just keep moving higher because you know what? We are in an uptrend. The candle is not closed, and while we are in an uptrend, as you see, this is definitely an uptrend. No signs of reversal. We have actually collected liquidity there. We have collected liquidity about the level of 1880. We have collected these small liquidity level, just showing it there with the line, and we're trying to move lower. We're trying to move lower, and I would say that the gold has changed its direction when like 50 minutes candle or at least 50-minute candle for me closes below these support level of no, this is not where I'm looking at. Where is it? Yeah, right place. Yeah, below 1878. Yeah, this is the support level I'm looking for. We can delete this one. And if gold closes with a 15 minutes candle below this level, then we can look for sell trades. Of course, we can look with a stop loss above the recent high and take profit like whenever your risk management says you to. I usually take 1 to 3 risk reward ratio. You can take 1 to 2 or 1 to 1 as you want. You can close part of your trade at 1 to 1 risk reward and then hold the trade for a longer period of time because it will be risk free. But nevertheless, you need to get some bearish reversal pattern. But on the 5 minutes time frame, we actually have a bearish reversal pattern over there because we have gold collected liquidity here and broke through this local low. But this is very local story. So if gold closes below this level with a 5 minute time frame, then you can look for sell trades at this area, this black area. And of course, your stop loss should be above the high, and your take profit should be 2 times or 3 times the stop loss. So yeah, as you can see, the 5 minutes candle closed. Actually, it closed below. So this is a bearish factor for us. 50 minutes candle hasn't been closed below the trend line. So if you're a trader that usually takes 15 minutes time frame as their entry time frame, then you still should be waiting. Let's also look again at the Euro USD, which is still falling. Just let me check the chart, guys, real quick. Check the chart. Um, I see one comment about the network issues. Guys, I hope everyone is good with the network and everyone is seeing and hear me. Yeah, it's okay, hear and see. Yeah, thank you guys. Thank you very much for saying this to me. This is very helpful from your side. Let's get back to the charts. Okay, Euro USD is falling quite fast. We're on a 1 hour time frame, so we are trying to break through these level. These previous low, actually there are two lows here on the chart. I wouldn't say that one level is more important than the other. As for me, this is just like a stop loss levels and the price. As you can see, I want you to like look at this very closely, but I just want you to see that we are on 1 hour time frame. Yes. Um, you can see that the price have collected liquidity just below the previous week, just below it, and then it started to reverse a little bit. It is not reversing right now. It's not like you should buy. It's not like that. But still, it has collected liquidity, and now it can go high because Euro USD, just as gold, is moving from one liquidity pool to the other liquidity pool. The price collects stop losses from one side, for example, from bears, and goes to collect liquidity from bulls and vice versa. At least that's what I'm seeing at the charts for the last several years. And these liquidity pools have been collected, and the price went to this liquidity pool. Can it go lower? Of course it can. Of course it can go here and there and there and up and down to like the level of 1.052 and maybe even lower to, for example, to 1.045. This is like the recent low. But if to look, let me, yeah, yes. It's not 1 hour time frame, it's one, yes. But still, if to look at 1 hour time frame, which is preferable for me, the euro, because here we can say that the chart is really showing some signs of a bearish trend starting. We need to wait for 1 hour candle, guys, not like 50 minutes candle, not 30 minutes candle, but I recommend looking for 1 hour candle closing below these two levels, closing below the level of around 1.05850. That would mean that the price has really showed some bearish momentum, some intentions to move lower, and I'm trading the chart. So news release is nothing more than a spike of volatility for me. This is the reason to look at the charts because the trend can change in these high volatility spikes because there are a lot of liquidity from both sides of the chart. So the trend can really change after some news release, but still the very moment the news come out, you just need to watch. You just need to watch carefully and give the market some time to explain its intentions, explain where the market is going. Okay, guys, so I'm just checking the chart. What else should we look at? I see Australian dollar versus the USD. Okay, we have it over there. Daily time frame. Yeah, it's looking like nothing is happening here, don't you think? Just we have this channel, this for some kind of a channel. Not very accurate from my side, of course, but maybe this is a channel. Maybe this is a badge. I don't think so. It's moving down, but very slowly. Okay, let's move to lower time frame. This is way more active. Let's write it down. Australian dollar versus US dollar on 1 hour, of course, guys. That's great. Hey, also, this is a head with the shoulders pattern, I suppose. Yeah. It's breaking through. Okay, so if the signal is pretty clear for me now, when I have put some lines on the chart. It's helping me a lot to understand what's going on. But if the 1 hour candle closes below this line, below this black trend line, then probably this is a better signal, and I would look for sell trades. Yeah, which is which is still good because we're in a bearish trend on a daily time frame. We are moving down, at least from this point. On a bigger scale, this is also like a bearish movement, but very, very slow. That's what on a daily time frame. On 4 hour time frame, we are moving down in a channel. Mm, but we have touched the upper border of the channel and lower border of the channel, so this is mostly a consolidation over there, and on 1 hour time frame where I look for entries right now, I wouldn't recommend you uh, to seek for high risk reward ratio over there, because what I'm looking at is a channel, as you can see, and we are moving between like the upper border of the channel and the lower border of the channel. So we are right now in the middle. We're right now in the middle. We can draw the Fibonacci just to understand where we are, and we are exactly at 50 Fibonacci correction level, which is the middle of the range, which is the middle of the range, and that means that the chart has like the very same chance of going up and down. I wouldn't recommend opening this. I would skip this. Actually, yeah, I would skip this. So guys, if you're trading Australian dollar to the USD and you have clear entry signal, then enter, no problem. But I don't know. As for me, it's not what we are looking at right now, not what we are seeking. Let's look at the GBP USD, the British pound to the USD. It's also trying to move lower, but the channel is very uncertain here, and there is nothing to look at in terms of a channel. But we have some trend change. We have this liquidity collection. We have collected nothing. Oh, maybe this level. Let's show. Let's see. Let's see. Yeah, something like that. Something like that. Okay, great. We have collected some liquidity. We are going lower. We broke through this week, through the start of the movement, which is the level of 1.2266, and we are going down. We are going lower. That's great for the GBP because I'm bullish on the United States dollar. That's why I'm bearish on the pound, on euro, and on gold. Yes, the 50-minute candle is still not closed, but for the 5 minute time frame traders, there was a sell signal, the breakout below this line. So if you're guys selling, then congratulations. If you're waiting, just as me, for the candle to close below this level and for some pullback, that's totally okay. Also, let me just change it to 15 minutes. Yeah, if you guys just came to the stream, then hi again, it's me, Eduard, a VAS analyst, and right now we are looking for sell trades in gold. We are looking for the 15-minute candle to close, then we are looking for another candle to form. It would be great then if the next candle is green, is going higher, is giving us some pullback, some good entry points, and then we are looking for the trend for the trend continuation, which is down for me. Okay, that's great. That's great. Here, US 500. Let's check it. It's still not moving. Like it just sleeping. I don't know. Nothing is happening here. Yeah, it's just boring to look at. On the daily time frame, though, we can see that we are moving in a channel also. This channel, we didn't reach the upper border of this channel, so we still can go higher, but for the macro scale, from the fundamental side, because of inflation rising, and that's, guys, this is very important for you to understand how the market is working, because I'm a technical trader. I use charts to understand like what is happening, to look for entries, but I need to understand the macroeconomical conditions, like the fundamental side, to know what to look at, to know where I'm expecting this to end up. And I'm expecting the US 500 to go lower, to break through the 200 daily moving average, and to go lower, to go to like you know where? Oh, you don't know where, to 4,000 to 4,000 level, and even lower to 360 3,600. I mean, yeah, because there is nothing good in the U.S. economy right now to be happy about. The inflation is rising, and what is worse, the inflation is rising when the rates are high. So that shows that the U.S. Fed is not controlling the situation. They don't control the inflation. They need to keep the rates at this very high level and damage the economy if they want the inflation to go down. But the inflation is not going from the consumer side. It is going from the side of producers. So from oil prices, which is we definitely need to look at the oil. At the stream on Monday, I said that oil is going to close this gap, and I said that you should aim for the level of around uh, 84.4, which we didn't reach, unfortunately. So this is still a good trade idea that you have witnessed if you have attended the stream on Monday. But we didn't reach the final level, what I'm expecting. This is maybe like a catch, and oil can try one more time to go lower, but still, on a bigger scale and for our time frame, oil is bearish. Oil is going down for me, and it should continue moving lower. And this will be quite helpful for the US because if oil moves lower, then it is easier. It is beneficial for producers. The producer price index, the other side of inflation. So we have consumer and producer sides of inflation, and the producer side can actually show some weakness, some declining. If so, that's very good. That's very good. The inflation is declining from the producer side. For the Fed, it's bad because when the prices are not growing from the producer side, then they are not growing from the consumer side. But but as for now, there is nothing good for the US economy. There is nothing good for Bitcoin also. The coin and crypto market as well have collected stop losses above this level. Yeah, around 28,000, and then started to decline. Um, a lot of traders that I know are already selling the crypto market, and it is going pretty well. If you look, for example, at Bitcoin for our time frame, it is going pretty well. So these liquidity collection, this liquidity collection, a lot of stop losses were liquidated here, and the crypto market is going down. But me, I'm waiting. I'm still waiting for a sample, but for another stop hunting at around 28,500 level, and then I will be selling Bitcoin like very hard. But that's for now. If you're a Bitcoin seller, then it's all good. Continue selling. The final target is 20,000, and you can close part of your trades on the way to 20,000. By the way, 20,000 level is almost 25% down from the current level. Yeah, so that's a long, long way down, and we can start selling right away. But I am looking for another uptrend movement to get rid of all short traders that went in the market too early. So that's why I will be looking for sell trades around 28,500, 28,000, maybe on 27.5. Yeah, okay. Also, what else should we check? Yeah, I see your comments. Stock will crash. I hope so also. I think it also will crash. Let's check gold real quick. So yeah, we have the next candle. The first one actually is not bearish. You know what? It's not bearish. It closed above the week of the previous low. So we are pulling back from the support level, and we can go higher. We can continue moving higher right here. We need to wait for two, three more 15-minute candles and also to understand what is going on 5-minute time frame. So this is bearish in terms of breaking the trend line, and this is still not bearish in terms of breaking the previous low. So if some of the upcoming 15-minute candles closes below the 1878 level, then this is a sell. If not, then this is not sell, not sell. What is euro USD? It's also not closing below this level. So that's what I'm talking about, guys, like for the last 30 minutes or so. We are looking at the news release, which is like another liquidity collection, just as always, another liquidity collection. Yeah, everything is moving as we expected. The pound versus dollar is also struggling. It's struggling to move below the previous low. So we can actually see another uptrend wave, another attempt to break through the highs. So yeah, guys, and Australian dollar versus the US dollar, it is not closing below the support. That's why it's important to wait for the candles to close. Otherwise, you will enter the market with the crowd of people that got too emotional, and this is not beneficial, not productive for your trading results. Okay, I think we have analyzed pretty much everything there. We have traded on the CPI release. I hope, guys, that you got several trade ideas that you will be looking here and maybe got some insights about upcoming market movements. Yeah, pretty much every important instrument. Oh yeah, USD JPY, it's just fantastic. The Yeah, a couple of words about USD JPY before we end the stream. So yeah, USD JPY for our time frame. What we have here is another consolidation, another sideways movement. We have several borders to look at. The upper one is this, and then we have also this border, and then this one, and the lowest here. Let me get rid of all these lines because I want it to be clear. Yeah, that's better. What I'm looking at here is that the price have collected stop losses below the lower border of this local range, and it's going to go above 149.5 level to collect liquidity from here. So this is for intraday traders, for scalpers even. I would like to say that you can look for buy trades around here, around 149.32, 33, with a take profit at around 149.6, and stop loss below this support level. Yeah, but this is a risky trade, guys, so be careful over there. This is like very scallop like trade. After that, I expect the JPY to go higher, and I would be waiting for the reversal to occur. If no reversal happens, then I will be buying USD JPY to the level to the previous high, to the level of 150, and I would be waiting for the Bank of Japan to make their moves because they're like just watching at how their national currency is getting weaker. I guess that's what they want to. That's what they want to see. Thank you guys for staying with me. Thank you for writing in the chat. Thank you for putting your likes and all the stuff. Please share this stream and forthcoming streams with your friends and trade with FBS. Of course, the best broker you can ever meet. Thank you for being here. I'll see you in the next live streams. Bye, guys.